The World Bank says slower economic growth in developed countries will mean less investment in the developing world and smaller markets for some African producers. Correspondent Scott Stearns has more.
World Bank's report on global economic prospects for 2010 shows uneven growth in Africa. In Botswana, the key diamond mining sector is leading an economic recovery that's expected to push gross domestic product up by as much as 5% this year. In Nigeria, business leaders and consumers say they're having trouble getting loans because last year's $4 billion central bank bailout of failing commercial banks has tightened up credit. When there is money to lend, interest can be as high as 20%. Nigeria's government is helping commercial banks refinance loans to power generators because unreliable electricity remains one of the biggest economic impediments in Africa's largest oil producer. The World Bank says the impact of the global financial crisis on sovereign debt could make credit more expensive and curb investment in emerging markets.
On the one hand, that seems like it's a European problem and doesn't concern developing countries, but our research suggests that this might actually have an important impact. So we're seeing that growth, which otherwise is actually coming along very nicely, we expect growth of about 3.3% for the world as a whole for developing countries, more than 6% this year. We see that that's potentially going to be threatened by what's happening in Europe.
For now, the World Bank says growth has not been affected by concern that the financial collapse in Greece could spread to other highly indebted countries. Eurozone countries are taking austerity measures to bring public finances under control. Thousands of public workers marched in Madrid Tuesday to protest salary cuts that are meant to reduce Spain's budget deficit to 9% of gross domestic product. If the crisis in Europe worsens, the World Bank says growth in developing countries will slow.
It is definitely a tenuous time. I think there's a lot of tensions in looking forward. And we were moving very happily along at an increasing rate of growth. Our earlier expectations were to raise the outlook for the United States, for Japan, for Asia, as I was saying, for developing countries, the latter group which were really driving the recovery.
Budget cutting in donor nations may also reduce international assistance, which can account for as much as 20% of government spending in some developing countries. Judging by past economic crises, the World Bank says international aid is likely to be cut by nearly a quarter. Scott Stearns, VOA News, Dakar.
And for more information on any of today's stories and all the latest on the World Cup, please visit us online at voaafrica.com.